Hi, this is Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of August 7th, 2016. Well, today on Friday, August 5th, there was a good jobs report, and the market rallied just a little bit, and actually the S&P 500, we're looking at the daily chart here, put in a new high today. And my comment here would be, well, that's good news, but, I qualify that with a but. Of course, increasing jobs and more people having jobs, great news. We all want that. But I say but because GDP is absolutely flat and there's just a tremendous amount of uncertainty in the market. Uncertainty about when the Fed's going to raise interest rates, uncertainty about certainly the presidential election and the political climate and what's going on around the world. So we've had a pretty strong rally post-Brexit here, but the likelihood, the probability of making meaningful new highs is really, really low in my opinion. Let me show you analysis here. I'm going to do let's say that this is a 5-wave sequence here, and it certainly could be an Elliott 5-wave sequence. So this would be wave 3. This is the biggest move currently, and if that is, and it looks like it is, then this Brexit move here is the retracement to that, right down into the Fibonacci retracement zone, and then the extension from that is just using Fibonacci extension tools. Projects that we would go kind of right where we are, maybe a little bit higher. The high end of this would be 22.27. Not really incrementally impressive gains for the market from here. What it's showing is we're in the target zone right now. And as we look out at the economic calendar of news that's coming out, there's not much news really planned for the next several weeks. Probably the biggest deal, there'll be another employment report coming out at the end of August, and then we don't have another FOMC meeting until late September. And we do have the minutes being released from the last meeting on August 15th, but that's old news. They've already told us what they're going to do or not do. At this point, it's not do anything. They're watching jobs, and jobs are going up. So the likelihood of a interest rate increase probably toward the end of the year goes up, and that does not help the stock market. And if you just stand back and think about it, now I'm a technical trader. I focus on the technicals and the reality of the charts, but I pay attention to, what's going on around the world. And what good news could come out that would drive the market to meaningful new gains? I have a hard time imagining what good news could inspire investors and traders to push the market up to, up to 23, 24, 2500 on the S&P 500. I really can't think. The only thing that would be super exciting would be the emergence of a third-party presidential candidate who's actually legitimate and competent and credible and trustworthy, and people might get kind of excited about that, and that doesn't seem likely. We seem to be stuck with the two candidates we have, and I think the market hates uncertainty, and either one of the current candidates is probably not going to help the stock market. It will probably go down when one of them gets elected for different reasons but the same direction. Meanwhile, this is a really tough market to trade. Until we get some, a real trend going, and the obvious, really, really strong big trend that we have to look forward to is a downtrend. But it hasn't started yet. So until then, we look at individual sectors and we trade very, very carefully. And we're still eking out some pretty good gains on some individual stocks and individual sectors. But the broad market, it's just tough. It's just tough right now. It's a good time to be careful and to really, really exercise risk control. And we will get a good trend, and we will have great opportunity for profit in the near future. So that's where we stand right now. No really big news coming up, and hard to imagine any really, really good news that would push the market up to meaningful new highs. So let's take a look at gold and oil now. So here's gold on the daily chart, gold futures chart. We've been saying for a few weeks that gold did get up to the target zone. It was a really, really nice rally for most of the year. But it looks like it's kind of topped out here. We had a pretty big down day, almost 2% down today. We've crossed down over the baseline on the Ichimoku indicators here, We're getting ready to head into the cloud, and I would not be surprised if we get a pretty good pullback in gold. That's not proven yet. We would need to take out this low here at about 1316, but pretty good chance that gold's going to pull back at least for a while. I think that the top may be in on gold. Not proven yet, but that's what it's looking like. Now oil is getting really, really interesting. Now we had this pretty sharp move down over the last couple months, but it still looks like oil in the bigger context is its recovery is underway. We've got a nice sharp reversal off of the bottom here, and we went down to the absolute extremes of a legitimate Fibonacci retracement from this big move, and now it is reversed. And so let's see this move up, pull back a little bit, and then go up again. And if it does that, then the next leg of this is on. So oil is a really, really interesting segment, and that's where we're going to be focusing our attention if this gets proven. We got a little bit of time, a week or two at least, to see this play out and for it to be proven. But once it does, there could be some really, really good trades in energy, and that's again what we're going to be focusing on. That's kind of where the hope lies right now until the broader market trend gets clear. Well, that's it for this week. That's the update. Tough time, but yeah, that's trading, that's investing. It's not always clear. It doesn't always move in a really clear, strong direction, and we have to wait for the opportunities, and they will come. And they will come, and we will keep you updated as it happens. We may not know what the absolute tops and bottoms are, but we can tell when the trends have changed. The indicators are highly predictive, and we'll know, and we'll give you a early heads up on that, and we'll have lots of great trading opportunities. So use risk control, keep losers small, be very, very careful, pick only the very, very best trades, and stay tuned. We'll be back. Thanks.